Hi everyone, this is Adam Golden with Compass Real Estate. I'm joined again today with Chris.kamali, loan officer. And one of the things we wanted to talk to you guys specifically about is essentially what makes up your mortgage payment. In particular, we're looking at PITI, principal, interest, taxes, insurance. There's also a little bit of an addition, which could be your HOA as well. Yeah. Wanted to have Chris kind of just talk a little bit about that, and we'll get a little bit more in depth on it as we move forward.
You got it. So from a underwriting standpoint, the PITI is what the banks will look at to see for qualification from a housing standpoint. If you have a loan that requires you to put less than 10% down, then most of the time you'll be required on a monthly basis to not only pay your principal and interest, which is your main mortgage payment, you'll also be required to pay 1/12 of your taxes and 1/12 of your insurance. What the bank does with that money is they take that 1/12 and they put it in a piggy bank, and whenever those payments are due, they pay them for you. They require that of loans with less down payment because they want to ensure that the borrower has put the money aside for these other expenses outside of the mortgage. When we qualify folks for a mortgage, on the taxes, we use 1.25% of the purchase price.
And I was going to say, along the lines of taxes, one of the things that we want to consider in our local area here is there's something called Mello Roos. And in some of these subdivisions, and you want to obviously talk to a real estate agent or your lender about this, but in some of these subdivisions, the Mello Roos tax, the property tax, is actually going to be greater. It could be anywhere from 1.6 to closer to 1.9%.
Yeah.
And that makes a big difference in what you end up paying for housing.
So from an underwriting standpoint, we always use 1.25% or higher if the community has a higher tax bracket. So newer communities that may need to build schools, fire departments, etc., if they have a higher tax bracket, that will reduce your approval for your purchase price because more of the money is going to go to taxes. So something to consider when you're looking at different neighborhoods. Is there Mello Roos? Is there something that's going to be more than 1.25%, because that will drive down your affordability?
Yeah, makes total sense. So obviously check with the lender, check with your agent. We appreciate your time on this one. I'm Adam Golden with Compass Real Estate. Chris.kamali, loan officer, as always. We appreciate your time on things and look forward to next time we see you. Take care, guys.
Bye-bye.